And I think, when you're talking about the idea of news, in a perfect world, you have strong economic data, supportive official commentary, and blowout prices, to the upside or to the downside. And you can go the other way. In other words, negative economic data, depressing economic commentary, and very, very sharp declines in equity prices. Either way, when you have these three elements, it tends to make for strong momentum-like moves. When you think about what I do, basically, it's nothing more than just trading momentum. If you, this is Aussie, but let's look at the euro, because euro is my bread and butter trade, right? So this is a 10-day euro, and what I'm going to do is I'm just going to forget everything else. Let's just look at the 00 levels. Let's look at the chart on the 00 levels to understand the sort of the broad mechanics of what's going on. So the euro has gone up about 600 points in about 2 weeks or so, right? And if you look at the chart, you basically see it flowing to the 41, flowing to the 42, correction back up to 41, then flowing to the 42, another correction, flowing to 43, flowing to 44, correction to 43, flowing back up to 45 with a couple of, retraces, flowing to 46, right? If you sort of look at it from a longer point of view, you see how you just have these kind of flows that you want to try and ride when the price aligns yourself. Now, of course, you're occasionally going to get yourself caught where, you have a false flow. This is a flow that just doesn't work and it stops you out. But then typically, a lot of times if you get a second wave, the second wave is stronger and it kind of, takes you to your target. Very similar. I was in Miami Beach, Memorial Day weekend. It's very similar to kind of watching wave action. You get a sort of a slow wave, right? Sometimes it doesn't quite break. And then the second wave comes in and smacks you in the face. And that's kind of what you want to do. You want to ride that second wave, for the ride back home. That's why you have to relax and not freak out about every single stop, not freak out about every single move. But what you see here, obviously, right, is a very nicely strong trending environment. And my setup, this kind of a flow setup, of course, works best in a strong trending environment. I mean, if this was back and forth, it'd be extraordinarily difficult. I would have to be perfect in my timing. I'd have to step away from the market just at the right time, step into the market just at the right time. My selection would have to be extraordinary for me to replicate the sort of very easy, very kind of a non-stressful positive record you would have had several weeks just trading it to the direction, right? So I hope you understand that it's never quite that simple, but it's really not that complicated. It's simply a matter of trying to figure out, hopefully having the price action in your direction and obviously having the news flow on your side when you're trying to do this. Any more questions that you guys have? I wanted to just go through the main stuff, but I think we've covered most of what I want to do. While you guys are thinking of your questions, let me just show you a variation of the setup. And by the way, as we're talking right now, obviously we see risk coming back a little bit, right? It's funny. I'm just watching a couple of people retweeting my 146 POMO mark. But I was going to say, you're seeing risk coming back a little bit, right? You see, the euro tested 46 came back up, and you see the Aussie now starting to perform just a little bit better. We still haven't broke above the 107.50. Still really haven't taken out a lot of, gotten ourselves back up to the territory where I really want it to be. But the tone is looking firmer than it was just a little while ago. I don't trade exotics at all. I only trade the majors in the 00. And I want to show you a variance of the 00 strategy with the pound, because I think the pound is a notoriously difficult pair to trade because of the volatility. But those of you who saw my video, I'm just demarcating the 00 marks here. Those of you who saw my video know that one of the things that I like to do is another variance in the strategy is Well, typically you want to, you trade to the OO, but occasionally you also want to see once the price breaks in other words, if you break the OO, you tend to have a lot of times momentum to overflow to the upside or to the downside, right? Once the level is broken, that tends to signal to you that there is negative or positive momentum behind the trade. And I think nowhere does it signal it better than in other words, nowhere is the overflow past the OO stronger than in the pound, which tends to be obviously more volatile than some of the other pairs. It tends to have more continuation. So just to show you, a couple of examples that we can take, and if we start from here, if we broke the OO, if we traded, this is a trade that I trade with 25 target, 50 stop. So here, positive trade on 25 target, right? Another positive trade on the break of the 63, right? Another positive break on the break of the 64 because, my stop is 50 and I'm just breaking it out. I get stopped over here on the first attempt at 65 because I get stopped out at right on target here at 60.50. But I make the second move here. Now what's interesting here is I'll actually trade this both ways. If it goes up to like 40, 45, into the stratosphere and then comes back down to break the OO to the downside, I'll actually take it to the short side because it means you can't hold it. Just like it's the reverse of the idea. If it took the OO to the upside, then I'm going to join it. If it can't hold the OO as support, then I'm going to join the break and sell it to the downside. So here's a trade that worked. Here's another trade that sort of took a while, but actually worked out itself. It didn't stop me out at 50 and eventually broke all the way down. Here's a trade that didn't work, that stopped short, just didn't have enough continuation on the 64 level. Here's another one that didn't have enough continuation on the 64 level, but here's one that broke out, and here's one that broke the 64 today. Again, this one, I wish I had taken this one. I was just too busy in my Aussie watching that. I should have really taken the break of the 64 on the pound, because that would have been a great trade. So let's just take a look at, what happened here over this time frame. We have 1, 2, 3 negative trades, so minus 150, right? 1, 2, 3, 4, 5, 6, 7, 8. 8 positives. So 200 against minus 150, that's plus 50. That doesn't sound glamorous, but that's how the world works. You basically plus 50 after about a week and a half. That's pretty good. If you have that kind of a ratio for a whole month, you're plus 200 in a trade. That's really great for one single pair. And if I could replicate that, I would do that every single day.